Hi, Danielle Jackson, Investor Relations at Ashcraft Capital. Thank you so much for setting a few minutes aside to join me. Many of you have probably seen we are currently under contract with our 7th and final acquisition for the Ashcraft Value Add Fund 2. And the aspect is a 432 unit property in Orlando, Florida, currently under contract at a 9% discount relative to market valuation. This acquisition rounds the portfolio out, and now we are across 3 states and 3 major metros, Dallas, Atlanta, and Orlando. You're probably wondering, what does this mean to me? If you are a prospective investor planning to join us in the Value Add Fund 2, the time is now. We are anticipating our Class A shares to be fully subscribed upon the closing of this final asset. For those of you reconciling your investment goals and objectives, let's discuss that as it pertains to the Value Add Fund 2. We're going to discuss 3 areas. We're going to talk about cash flow or passive income. We are going to talk about current or short-term market volatility, and then, of course, inflation. So for those looking for additional cash flow in your portfolio, the Value Add Fund 2 has been paying distribution since April of this year and is on trend to distribute $2.5 million in its first year to our investors. Now, let's talk through volatility as it pertains to the Value Add Fund 2. We're going to take just a few minutes and look at a slide together, which is illustrating data provided by CBRE, which is the largest real estate company in the world. And it details risk-return profiles for various commercial real estate asset types. And given the Value Add Fund 2 invests exclusively in multifamily apartments, we're going to spend our time there. And if you look at this chart, you will see that multifamily has delivered the highest historical returns from 1995 through 2020, with the second lowest standard deviation, which is another term for risk. Now, please keep in mind that historical returns are no guarantee for future performance, but if we look at just a snapshot of this 25-year time period, again, multifamily delivered the highest return with the second lowest level of risk. And additionally, a fund model such as the Value Add Fund 2 structure, volatility may be further limited from the built-in fund diversification. And last but certainly not least, inflation. Ashcraft Value Add Fund 2 has 2 different classes one could invest. For those that are more cash flow, less growth driven, our Class A delivers a 9% monthly preferred return with limited participation in the disposition of an asset. Our Class B investors are on average a 7% monthly preferred return, and they do participate in the disposition or the forced depreciation on the assets. The projections for that, based on historical performance and the projections for the fund, are a 13 to 20% cash on cash return or a 13 to 18% net IRR. If you look at Ashcraft's historical track record, we have taken 26 assets, full market cycle, and we have delivered a 25.6% average cash on cash return for our LPs. So I recognize that there may be additional questions, and for those of you that would like to discuss the Value Add Fund 2 with our investor relations team, there are multiple links to schedule a call within this email, or you can reach out to the investor relations team at investorrelations@ashcraftcapital.com. Thank you again for taking a few minutes, and we look forward to a future partnership. Have a great day.